Today, Bitcoin holds above $44,000. And the Solana Foundation's head of policy breaks down the findings of its new energy use report. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Crypto prices are mixed this morning, with Bitcoin little changed and holding its spot above $44,000 as of 12:30 Eastern. Ether, meanwhile, declined slightly to the $2,200 level, while Solana jumped 4% to $63. Okay, let's talk about the top stories. Binance's new CEO doesn't want to say where the company headquarters are located. The FT reports that Richard Tang, who took over the CEO position after CZ stepped down last month, declined to disclose where the company is based. While speaking at the outlet's Crypto and Digital Assets Summit in London, Tang reportedly asked why anyone feels entitled to those details and said there isn't a need for Binance to share that information publicly. Of course, the business is still reeling from a $4.3 billion settlement with U.S. officials over criminal and civil charges. Tang reportedly said at the summit that Binance acknowledged those mistakes and moved past them. Next, JPMorgan Chase CEO Jamie Dimon says the government should put a stop to crypto. In a Senate Banking Committee hearing on Wednesday, Senator Elizabeth Warren asked Dimon to explain why crypto is a, quote, attractive tool for terrorists, drug traffickers, and rogue nations. This is how he responded.
I've always been deeply opposed to crypto, Bitcoin, etc. You pointed out the only true use case for it is criminals, drug traffickers, anti-money laundering, tax avoidance, and that is a use case because it is somewhat anonymous, not fully, and because you can move money instantaneously, and because it doesn't go through, as you mentioned, all these systems that have built up over many years, know your customers, sanctions, OFAC, they can bypass all of that. If I was the government, I'd close it down.
Jamie Dimon has famously been opposed to crypto for years, telling CNBC Bitcoin is a hyped-up fraud at the beginning of this year. Finally, the IRS says it's chasing more and more crypto tax evasion. The agency's Criminal Investigation Division released its annual report this month, where it said that increased use of digital assets has coincided with a rise in digital asset tax investigations. The agency said those investigations consist of unreported income from capital gains, mining income and wages, gambling payouts, and rental income paid in crypto. The IRS also said it's seeing taxpayers fail to disclose ownership of crypto in an attempt to shield holdings. All right, back to Solana for our main story. The Solana Foundation's new energy use report just dropped today. Crypto World's Talia Kaplan spoke with the foundation's head of policy, Amira Valliani, about the findings as well as how the crypto industry can address energy efficiency and environmental concerns.
So for years, crypto has been synonymous with energy consumption. In fact, in September 2022, the White House pointed to crypto assets sometimes requiring considerable amounts of electricity usage, which can result in greenhouse gas emissions. Well, the Solana Foundation has been vocal about its commitment to sustainability and just came out with a new energy use report, which revealed that energy use per transaction on the Solana network declined by 25%, with total emissions from the network decreasing by more than 17% since the last update more than 7 months ago. How has Solana been able to achieve this drop in energy use, and what does this signify?
Sure. Well, thanks for having me and giving us a chance to talk through this. I think the first thing to be aware of is there are different types of blockchains with different types of technologies. And Solana in particular is a very energy efficient blockchain. It always has been. That's also the same things that make it a very fast, a very cheap blockchain. And so if you look at a single transaction on the Solana network, that's the energy equivalent of less than a Google search. So that's what we're talking about just in terms of sort of magnitude here. Over the last 6 months, the Solana Foundation has this commitment to regularly measure the carbon footprint of the Solana blockchain, so that we can hold the network accountable to make sure that, we are doing our part in this climate crisis. And so over the last 6 months, what we've seen is that the total carbon footprint of the network has dropped around 17%, and the carbon footprint on a per transaction basis has dropped about 25%. What's likely driving the fall of the carbon footprint on a per transaction basis is general upgrades to the network that just make it a more efficient network as is. And so you'll see these ebbs and flows in the footprint of the network, but what we're excited by is the fact that the footprint of the network is heading in the right direction. And what's always been true, which is that it's a very, very energy efficient network, remains being true.
So even with the significant reductions, the Solana Foundation purchased carbon credits to try and offset the network's 2022 emissions. How did that idea come about, and why was it important for Solana?
Sure. So The foundations first started releasing these energy use reports in 2021, a couple of years ago, as part of this conversation about the role of blockchain in the climate crisis. And we had two commitments there. One is we want to accurately measure the carbon footprint of the network. And then based on the measurement, we want to make sure that the network is carbon neutral. And so we've been purchasing offsets based on what's measured for the carbon footprint of the network ever since that first report. What's unique about what we're doing this time is that for the first time, we purchased carbon offsets for the network entirely on chain. So, carbon markets are historically kind of a messy market. It's really difficult to track and trace where these carbon offsets are coming from. And what's really interesting about these offsets starting to move on chain is they become much more transparent and much more trackable. And you don't see things like the ability to, for example, buy the same carbon credit twice. And so we're excited about this move to not just be offsetting the carbon footprint of the blockchain, but also make sure that we're doing it in a very trackable, traceable way and at the tip of that spear.
So, how is the crypto industry as a whole able to address energy efficiency and environmental concerns? What steps are being taken? A few months ago, I worked on a report about regenerative finance, or refi, which essentially leverages crypto rails to rebuild economies in ways that are more inclusive and sustainable. Is that part of the equation?
Absolutely. I'll say this is one area, if I wasn't working in blockchain, I'd be working in climate. So I personally am really passionate about this. I'm a huge tree hugger. I'm passionate about the environment, and we have to be hitting our climate goals. So I wouldn't be in this space if I didn't feel like the space wasn't 100% aligned with some of my personal goals and just seeing our climate thrive. One of the most interesting things here is not just making sure that we're accurately measuring the carbon footprint of chains or offsetting the carbon footprint of chains. We have to be really honest and accountable with ourselves as an industry about that, but also to look into ways that we might be able to use blockchain to be able to be climate forward. Now, I'm not Pollyanna-ish here about this, right? When I first heard about the idea of on-chain carbon markets, for example, my reaction was like, blockchain can't solve everything, guys. But the more I look into it, there's some really interesting boons here. So you have these companies that are doing on-chain carbon markets, like I mentioned, but then also people taking really novel approaches to the climate crisis using the benefits of blockchain technology. So for example, there's a company building on Solana called YHI, and they basically offer distributed weather tracking systems in order to incentivize better weather tracking in places where we're getting really poor data. There's people using distributed IoT networks, what we call DPIN, for really interesting use cases as well. So, you see the Helium network being used for flood censorship, or not flood censorship, flood sensors in interesting places, or to be able to track lines in the Masai Mara. So there are all kinds of creative things people are coming up with, and I'm really encouraged by what entrepreneurs are building in the space.
Last month, Solana reached its yearly high of more than $68 and gained more than 65% in November alone. What do you attribute the rise to? What's behind the recent price action?
So I'll say, the Solana Foundation, we can't comment on price. We don't comment on price, and it's not something we specifically pay attention to. But what I will say is that it's been really exciting over the last few years to be able to look at the grit and determination of builders in the Solana ecosystem. And what we are starting to see, and I feel confident we'll see going into 2024, is a lot of these builders go from heads down, building infrastructure, getting the really nitty gritty engineering done, to coming out with use cases that are going to be really transformative for businesses and consumers. So that's everything from making it really easy to get remittances around the world at really fast and really cheap rates, to people taking on secondary ticketing platforms and really fighting against extractive fees. And so I'm hopeful going into 2024 that these real world use cases are going to get a lot more attention, and people are going to see the potential of the technology.
Now, speaking with CNBC Squawk Box last month, Kathy Wood was bullish on Solana, praising the protocol for its cost effectiveness compared to its competitor Ethereum. What's your reaction to Wood's comments, and do you think Solana has the potential to outpace Ethereum as it pertains to speed and cost effectiveness?
Look, I think if you look at all the technologies in this ecosystem, I think they're all incredibly exciting. And what I'm here for is sort of the growth of blockchain technology. So are there differences between Ethereum and Solana? Absolutely. I'm excited about the technological promise that Solana holds. Absolutely. And that's really what I'm focused on. And so, everyone from, Anatoly, sort of the first driving engineer of the Solana ecosystem, to, and engineers and builders all over the ecosystem are really excited about the promise of this particular technology. And we're not here to, say anything negative about a different chain. We're here because we're excited about the specifics of Solana. And I think generally speaking, in blockchain, as all these technologies grow, we're all gonna see benefits to the industry and hopefully to the future of the architecture of the internet.
Valliani also discusses what regulatory advancements she'd like to see in 2024. You'll be able to check out the full interview at cnbc.com/cryptoworld. Okay, that's all for today. We'll be back again tomorrow, and we'll see you then.